Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So guess what? If you didn't hear, Twitter came public today. But that really wasn't the story. The story was how that was a sideshow for the meltdown in high beta tech that started bending yesterday. So with that being said, the last few days we've talked about how, we've been scratching our heads on how is the market going up or holding in there when you have technology getting weaker, you have the Russell getting weaker, and a lot of the high beta names that we play, while the Dow was up 115 points yesterday, were all lower. There were like 14 stocks that we track, and every one of them was down while the Dow's up 115 points, and we're all thinking that something doesn't smell right. So typically if something doesn't smell right, feel right, there's something underneath the surface that just isn't right. So with that being said, today the market got hit, and a lot of those stocks that started bending had downside follow-through. If you look at the chart here of the SPX, you will see, here's the trend that we've been in since November. Here's that last test of it right there. You take a close look right now of where we are, and you will see that we just had our first wide range engulfing bar. This right here, my friends, is a day to take notice if you didn't take notice some of the other things that we've been talking about. So with that being said, close below the 8-day. We're above the 21-day. This is your prior breakout. This is probably where we go to next. And I know we have the jobs report tomorrow. And bottom line is we were even above this. We were above this pre-market when the ECB cut rates. So you want to talk about an outside day. This is a blaring outside day. So I don't think you need to be necessarily all in short, but at least you should have gotten out of some of your longs considering the size of the move we've had since this red dog reversal, since we went above this descending channel here, since we had commitment and continued. So right here, a little risk down. We talked about the weakness in the Russell. You look at the Russell, and you will see this started getting weaker well ahead of the game. Okay, obviously the trend is still intact, but entries and exits do matter. Where if you do trade for alpha, this was your first little wake-up call where you had this engulfing bar right up here, okay, which could have had you take some risk down or maybe even look at some of your other things to take some risk down. Then you had that quick move, came back up, another engulfing bar that led to downside follow-through. Now this is already almost at the 50-day. This is already through the 8 and 21-day on its way to the trend line. So another reason to take a little caution, so to speak, after the S&P's up 24%. And then, you go to some high beta names. We talked about Apple. Okay, what did Apple do today? Apple wound up breaking this upper pennant to the downside. So with that being said, here's your wide range bar after earnings. This is when it tried to break above 3 days ago, and look what happened here. That was, it failed right there, and then now you're getting a little downside to the 21-day. So, with that being said, got to see what happens maybe into this area, and then potentially it could even retest, where it broke out here. But ultimately, this upper pennant could have broken to the upside. It broke a little bit to the downside. We also talked about Amazon. What's it going to do with this gap here? And look what it did. It, yesterday it closed in the dead lows, opened up, traded below the previous low, and then there's your gap pretty much fill or not. So with that being said, some guys caught this short. If you did, congratulations. It was pretty clean and it showed you some signs. Google held up a little bit better, but it too, is bending. And if you drew your line, which we tried to do on the virtual trade floor for all the guys with the free trials and everyone that's in there, this was a little spot where some people made some money short. Also, if you recall, with the hoopla around Twitter, we talked about how there have been some weakening signs in LinkedIn, in some of the other social networking stocks, Facebook obviously, and Yelp. We went over them in the morning call today. I think 220 was the price in LinkedIn to potentially get short, and then in Facebook we'll take a look. But real quickly, LinkedIn right here, look at that. Okay, this was your potent move after earnings to the downside right here, boom. Then you had your bear flag, right? This was a reversal candle, opened up, traded down. Then today, I couldn't get short because my keys were all messed up. We had some internet problems today. But anyway, some people did, and that was your continuation to the downside. Now it's below the 821 and then 50-day. That hasn't happened for a while. You have to take notice. Momentum stocks are great when momentum's there, but when momentum changes, you better take notice. And at this point, it's had a huge move, and some of the air was taken out, and now we'll see what happens if it can come down to this area. But at least what we know is, yesterday's low, and we'll figure out what goes on there. As far as Facebook also, that actually did catch a little bit of that short early on, and closed pretty weak. And there is, I guess you could say that this is a head and shoulders top right now. Okay, left shoulder, head, right shoulder. Here's your neckline, and we could see a discount there, okay, which would not be the end of the world considering look where it came from after earnings. We had all those tradable moves along the way, all the way up, but either way, now it's starting to change from the gap fill up here to the volatility after earnings, and now look where it is. So we'll see how it handles this tomorrow. So that leads me into Twitter. So I want to say, thank you to everyone that came on the virtual trading floor that started this week. We started running a promotion just to try and get people to look at what the virtual trading floor is all about, to see us put positions on, take them off, execute on strategies that we go over in the morning call, the recap, off the charts, price point sheet, because we have a lot of products. And typically the virtual trade floor is for people that trade all day long as a big brother that trade professionally or very actively. If it was too active for you, maybe off the charts is a better product because it's there's not as many ideas, so you could execute them and not be involved in the market all day, but whatever. So with that being said, we talk about the art of the first day of the deal, and I have to say, I messed up the deal somewhat because in the first 3 to 5 minutes the stock took off, and I went with it, even though it didn't really give you any time to consolidate, and made some decent money from that 45 to 50, and then thinking that maybe you could buy a pullback at 48, turned into 47, 46, 45, had to get out of a decent amount of it, went to 44, came back above 45. There was another trade there, went to 48, and then failed again. So P.S., it opened at 45 and closed at 45. That's gross. The only person that made money in that deal are the buy-side guys that got free shares, that pay their clients commissions, and were able to sell it at 45 from 26. Nice breakfast, lunch, and dinner, 19 points. But for the average person not involved in the deal, not much opportunity. Okay, you open to 45, go to 50, close at 45. Not a lot of ways to make money within there. You look at the chart real quickly, and you will see. We'll go to the 3-minute here. Where is it? There it is. So this was the first part of the deal. Okay, opened up, came in. It did give you a trade here. This is where I pretty much got long, but it happened so quick I didn't get that much. So into this, sold some, and then right around here, I was like, okay, let me buy a little bit versus that opening print, and then it turned into that, broke the opening price, and that might have been a lot of my sells. So with that being said, it then reorganized. Okay, so I think I went to I went to the gym at lunchtime. I'm like, you know what? I'll buy a little bit versus 44. Came back. It was pretty tight. Those watching us on the virtual trading floor saw that where we talked about that we were going to potentially add right here, and it became a nice add retest, and then it went all the way back up to here. Okay, and then from there, traded all the way down and pretty much closed right back where it started. That's just gross. There's hardly you can't really maneuver that. You had a few calculated trades, so this was just say one of them in the beginning, but you couldn't take any kind of size because it happened so quick. Okay, and then I guess you could say this was a topping tail. You should have just got out of the way and waited and never gave you a sign, but it happened so fast you would have thought that it would have continued. But anyway, then it broke this small little uptrend from the afternoon and then closed at what, 44.50, below that price. So again, hard to make money. Everyone out there now is going to talk about the valuation. Why couldn't they open it up at 35 and close it at 45? Not give these guys just a free lunch to sell it up 20 points, maybe make decisions on whether they should sell it up 10 points, and then whether or not there's room for people to get involved after the open. And now it's just going to be a wait and see. But at least the stress is off. At least, okay, it's opened, it's out there, and now we'll let a pattern build, and it'll just be a stock in our arsenal of stocks. But there was really not much opportunity whatsoever. Maybe little cash flow here and there, this and that, but overall, I don't think they did a great job. I think that they opened it way too high, and now it's going to need some time to work through, build a pattern, and then at some point it'll be cleaner, and we'll figure it out. But today, I lost money trading it, and it became a sideshow where I didn't get short a lot of the other things I wanted to short, as they looked bad yesterday because I was, intense about this situation. So with that said, we'll see what happens. We'll let it shake out. The only thing that people know right now about Facebook, everyone's going to give their opinion, is that you have 44 is today's low and 50.09 is today's high. Until we build a few days around that range, there's nothing else that could be said except for everyone's going to say, oh, it's a 30 billion valuation. It's more than Facebook. It's more than this. They'll keep talking about it, and then at some point, technically it'll be tradable once again. But for today, with as far as a trading deal, it was horrendous. Okay, you're going to see on the newspaper, oh, Facebook up 73%, rah, rah, rah. It opened and closed in the exact same spot. Round trips are not what traders like. We like to buy high and sell higher, or short low and cover lower, not, nickel and dime within a range and try and be perfect. And that's what you had to be with this deal because it was priced too high. So anyway, tomorrow is the jobs report. And at this point, you go back to the S&P and, you would think that this is a pretty potent down move. Okay, a potent down move like this, a day to take notice, typically leads to more downside, especially considering where we came from in early October, especially considering where we came from in early, November. Okay, this has been a heck of a move, and the market doesn't have to be up 24%. Like, we should pull in a little bit. The economy is not the best, and the world markets aren't on fire. And our markets, it's like a little disrespectful that there's been no type of pull-in, and they're making people put more money into the market just to get us up 28%. That's hard to sustain. So anyway, this was, but besides the action of this week, this is really your first, key to potentially seeing more downside in the S&P, and hopefully within this range with the Qs. Getting all choppy. You took off some tech, and with the Russell, already on the move to the downside, you took down some risk. The banks we've talked about, have been very lethargic, and they also already are through the 21-day, which is typically a sign. You have a high, a lower high, another lower high. You look at something like the best bank that was acting the best was Goldman. Now look at the size of that potent down day. This is potent right here. Boom. So, that if you were thinking it would be stronger, that got you out of it. Bank of America also hasn't been acting great. It actually closed in the lows. I still think overall, long term, it's, it'll be fine, but short term, I got stopped out of it when it went below 13.95. And, you have to figure out where you want to live now. Okay, you have to figure out if you're a macro investor, which if you are, and you put money every month, and you're 25 or 35 or 45, and you're going to do it for the next 20 years, keep doing it. If you're trading macro trends a little bit bigger and you make only a few adjustments a year, this is a spot probably to make a small adjustment just in case we do pull off only even 4 or 5% that you can embrace it. But if you're a technical trader, you follow intermediate trends and you're trying to create P&L and you're trying to create alpha, this week was an important one because it does feel like it should lead to lower prices and at least switch some gears. And I talked about going from neutral to positive to neutral yesterday with a hint of what's going on here, and now you have to be neutral to negative, and market's going to have to prove that it could find its footing and continue. But at this point, I think most people are looking to, find more breakdown areas versus, I don't see that many tradable long setups, at least no A+ ones, so we'll wait for it to work out. So with that said, it was a tough day not being on Twitter all day. I'm used to waking up 4:45, doing my tweets, getting on the boat, doing some tweets, getting here. I did put one chart in just because I felt like, I wanted to let everyone know in my community, even if you didn't sign up for the VTF, that things were looking a little wishy-washy and that S&P was engulfing a range and that you should have some risk down, and how we talked about, yesterday being a little lost with the Dow up 115 with high beta not doing so well. So I just wanted to, let you guys know a little bit of my thoughts because, I care about you all and, get a little sentimental. So with that said, I broke a rule and I had one tweet, and tomorrow, we'll see what happens. And I still think that even if you didn't join the virtual trade floor for Twitter, join it for yourself. Join it, for a helping hand. Join it for a community because that's what we're all about. And if not, you can connect the dots, between all the other avenues and vehicles we use. So it is Thursday. Go out for some, happy hour if you're in the vicinity to do something like that. That's what we're going to do over here. And, burn off some steam. Tomorrow's a jobs report, and then it's the weekend. Hopefully, you're doing it right. You're navigating these waters, and they feel a little rougher, and you don't want to get seasick. So that's another metaphor. If Brittany was here, she would make fun of me. And that's it. Tomorrow's the relaxed morning call. John will be doing it, or maybe the two of us, and we'll go from there. Have a good night.